Hello traders, Steve Ganz here, and welcome to the weekend update for May 5th, 2024. So I'm going to walk through our current open positions and then also do an analysis of the market and some of the big things that happened here this last week. So looking at our positions, first of all, this one, as the market ran up significantly on Friday after Apple's earnings, I put an adjustment that raised this right wing a little bit. I think we're in a good place here. I suspect that the market, we'll get into this in a minute, might stabilize, maybe even pull back a little bit. Apple, of course, had earnings where Apple jumped 10% overnight. As I've said many times, I am an Apple bull, and I was expecting a move in Apple, but that was even bigger than what I was expecting. But anyhow, we've adjusted this now and have this set up in a condor structure. It was a big move, and this trade had to be adjusted for a big down move a few weeks back and then a big up move. So a lot of whipsawing happening on this particular trade and chasing our tails, which is what results in that type of outcome. But we're not through yet. And I'm going to continue to work on this and try to get this back to close to a scratch. And then this trade is doing great. As you can see, all of the risk has been stripped out of this trade. This trade is going to end up with a minimum of a 12% return if our market stays in this general area for the next week, or excuse me, about week and a half or so. This thing will continue to add value, again, if we stay in this general zone here. But worst case scenario, we're looking at 12 to 13% return on the trade. That's the absolute worst that's locked in at this stage. IBM earnings, I did convert this. I got assigned the long shares of stock. So now I'm selling calls against that. So if IBM stays about where it is or goes up a little bit, I should be able to close this out over the next week and a half to 2 weeks and get this back into a profitable area. And again, IBM felt like it had largely stabilized after the drop on earnings that precipitated the getting assigned. And I own IBM long term. I'm comfortable holding the stock here. Of course, that does not mean that it can't go down. It's just one of those things that, it's a stock that I'm prepared to hold long term if I need to. And I'll just sell cover calls against it until it finally gets called away at some level of profitability. And again, that could be this next week. It could be a long time from now if IBM tanks. But I'm prepared for that. NVIDIA, likewise, a lot of whipsawing going on here. NVIDIA had dropped considerably, which caused an adjustment where we put in a big butterfly, then it ripped up, put on this call spread out here, and now we're chopping back and forth a little bit. It's certainly improved quite a bit over the past week. A little bit earlier in the week before the Apple news, it was actually hitting some profitability, but not much yet at that point. And I did float an order out there to strip out this whole butterfly structure, would have left us in this condor structure. That order did not hit, but it is still floating out there as a GTC order now. So if we get a little bit of a stabilization or a pullback, I think that order should hit, putting us into that condor position. So this bearish butterfly, we added to this as the market sold off. And again, at the time, I was thinking that, okay, we'll do something to raise this right wing a little bit in case we get a little bit of a bounce back. Obviously, we did get a bounce back. It was a big and a fast bounce back, which did not allow for time to adjust really at this point. So this is one I need to keep a close eye on here in this next week to see what transpires. We'll see in a minute what my expectations are. Again, my expectations right at this moment are stabilizing, possibly a little bit of a pullback. And so we'll get into that analysis here, but those are the current open positions at this time. Again, things were looking really good until the big run up. Now, a couple of these are getting a little stressed to the upside. But the reason I'm not overly concerned about that yet, let's come in, look specifically at the SPX. Remember last week, we had rallied right up to here, and I said if we look at the wave, we use Fibonacci's here. So I'm looking at this wave from top to bottom, and then we had rallied back up. So this point right here was about 50%. So a 50% retracement is very normal when you have a big wave like this and you lay some Fibonacci's on it. So we retraced to 50%, and I said last weekend, my expectation is that we might drift back down, possibly even down back here to this 49.50 or so range. Well, we didn't drift quite that low, and then again, of course, on Apple earnings here Thursday night, come Friday, we gapped all the way up here right to that 50% range and a hair above it. So really what I'm looking to see early next week is I'm looking to see, will this hold, or are we going to drift back down? So the two viable scenarios that I see is it does hold, we rally up, we get back up to this 52.50 range, then I would expect that we would likely roll back down into this 51.10, 51 range, somewhere down around here. So that would be one scenario, but the more likely scenario I think at this point is more of a drift back down to here, and then probably a return back up into this general area. So I feel right now like we're more likely to be playing this range of 5,100 to 49.50. That's, if I were to put odds on this, I feel like we're about 60% that we're going to play in this range. Probably about 40% we're going to play in this range. So it's pretty close. It's a little bit of maybe a toss-up. So obviously, things are certainly bullish after Friday. Let's take a look at our VIX, because our VIX even looks, quite frankly, a little more bullish in that VIX has really dropped off on Friday. It's like the fear just dissipated back out of the market, and we're back down here around that 13 range or so. So that is a bullish sign that, people no longer have that level of fear that they had here a week or two ago. Now, if we look at SPY, this is the part that, it makes me question how firm this rally is. And you can see that while we had this big rally, we had, this day of rallying, this day of rallying. In both cases, our volume was a little low in SPY. So generally speaking, we're getting higher volume on the down days. So the people that have weak hands, the people that are willing to sell when they start to panic, they're still, at least based on the volume that we're seeing, in control here. So we can also see down here, this is a couple new indicators that I added, accumulation distribution. We can see here that during this sell-off, there were people accumulating, people willing to buy during that sell-off. Now, during our rally up, there's fewer people willing to buy. So that's interesting that when the market's going back up, we're not seeing the volume coming in just yet. The other thing, this line down here is called the Chaikin money flow. And this kind of also indicates whether money is more going into or out of our markets. And so right now, it's still below this center line here, if you will, which is more of a distribution. People tend to be a little more sellers than buyers at this point. And again, what you look at here is things like this. So this is strong, serious buying. When you have big bars of volume here, you also have lots of accumulation in these blue bars. So that's a very strong bullish sort of sign that you got here, that you got here. Here on these two up days, just looking a little weak. Could have been because it was a Friday and maybe not as many people in their offices, etc. But I think a lot of people are just waiting to see, is this real or is this just a bounce off of Apple at this point? We'll take a look at RUT here as well. And RUT, similar story, rallied back into what you might consider to be a little bit of a resistance area. We'd gapped down through this area back, 4 weeks ago, something like that. Gap down, sold off, rallied back, sold off. Now we gapped right back up to that same point, that 2050 range. So hard to tell whether that's going to stick or not. And RUT, of course, is the IWM is the ETF for that. And we can see the same story here. The volume just isn't super strong in this. So again, I feel like that was a big bounce and that it's not yet a proven or a meaningful bounce. It was a bounce off of Apple's earnings, basically, and we're going to have to see if it's going to hold. So that's why I'm not super concerned about a position like this just yet. Again, because I'm thinking that we might get a little bit of a drift backwards here. Same thing over here. If I'm wrong, I'm going to have to see when the market does break out to the upside, I'm going to have to see about getting some adjustment on this fairly quickly, although we do have over a month till this expires. So there is a fair amount of time, 34 days left on this. Same thing holds true here with NVIDIA. If NVIDIA does continue to move up rapidly here, I will have to get that adjusted as well. So we have a mix of things. We've got things that are positive delta in here. We've got some things that are negative delta. And this is what I'd like to see is a mix of things that largely we're working on theta decay. Our goal is to keep things somewhat balanced and then let theta do its thing. And that's what this is all about right now and the balance that we have. And then we eventually, the goal, of course, is to get positions worked into profitable positions like this that we can then maybe milk a little bit further as we get into them. The one that I closed out last week, or I guess it was 2 Fridays ago, closed out for a nice 15% profit, something like that. Similar story. It had some ugly sides to it at one point, and then it had a number of adjustments in it that ultimately got us to where we were able to get out of it at a nice profit. So that's my goal with these, is to work them through as best as I can, keep a mix of positive delta, negative delta, and kind of balance those out as needed. So that's it for this weekend's update, everyone. Take care.